crypto news today, we have central bank super weak. Did not receive market expectations. Weekly market review from Token Insight. So currently looking at Token Insight article by Token Insights. So live on Coinmarketcap blog at Alexandria. I'll drop a link in the comment section so you can get access to these updates. On table of contents, we'll be looking at everything as expected. Investors tend to be more cautious. So it's no matter from the perspective of price or volatility, this central bank super week has the lowest impact on crypto markets since 2001. The number of indicators show that the market has begun to adopt cautious attitude towards the pricing of cryptos due to the contraction of market liquidity. So future changes in crypto prices will depend on investors' judgment on inflation and economic recovery. So everything is expected. So this week is an important moment for the crypto market as central bank held meetings one after another in early November and announced their monetary policies for the next period of time. This time are called central bank super week by traditional markets. Usually, the impact of policy changes on asset pricing reaches its peak and pushes up market volatility. So guys, this is a graph from Token Insights. The BTC implied volatility, the red curve, and historical volatility, the blue curve in 30 days. So this is what you should be expecting. So among these central banks resolution, the Federal Reserve's FOMC interest resolution is crucial. The Federal Reserve's interest rate resolution in November did not exceed market expectations. Debt reduction will start with a $15 billion per month, but the interest rate will remain unchanged. The major capital markets such as Britain, Australia, Europe also kept interest rates unchanged for the time being, and we are generally optimistic about inflation and economic recovery. Surprisingly, in this central bank super week, the crypto market has not seen major changes, although the price of mainstream cryptos fell briefly at the moment of the announcement of the FOMC resolution. The Bitcoin was once close to $60,000 mark, but it quickly returned to normal, which may be due to the programmatic uh, trading behavior that triggered the sale of keywords. So, from the perspective of volatility, regardless of historic volatility or implied volatility, the change is also about 5%, a warm-up from September that central banks will begin to tighten liquidity is obvious. The market has already incorporated the results of this meeting into pricing, whether it is traditional markets or crypto markets. So guys, we have investors tend to be more cautious. So however, several indicators show that the market has begun to change quietly. So the skewness data of Bitcoin and Ethernet options fell sharply this week, concentrated on options far away from the expiration dates. So this usually indicates an increase in bearish sentiment in the market. Worries about shrinking liquidity have begun to emerge the options market. So guys, this is the graphical representation of what Token Insight is currently talking about it falling price of the bear market for BTC and Ethereum. So guys, if you find this article helpful, don't forget to click on the subscribe button. It says here these basis rates of mainstream crypto futures and derivatives as of 4 a.m. EST November 7. So we have BTC to 24% premium, we have ETH 28% up. So you can see the disparities in their pumps and percentage movement. So from the perspective of price changes, investors are also becoming cautious in the pricing of cryptos compared with the beginning and middle of the year. The current low volatility indicates that these assets lack upward or downward buying or selling momentum at a time when compliance is gradually improving. The caution of the market undoubtedly comes from worries about the future liquidity trend. So with the end of the central bank super week next week, CPI data and CGP data from multiple countries will be released one after another, which will bring clearer inflation and economic recovery judgment to the market. That if inflation data is in line with expectations, that is, Inflation is temporary. Central banks may not be able to take more aggressive measures. However, if high inflation continues and economic recovery is not satisfactory, even if risk aversion continues to benefit the crypto in the short term, but this also means that central banks may adopt some radicalization measures such as raising interest rates in advance, which requires attention. So guys, this is an article from Token Insight. If you have any questions, feel free to let us know. You can share your thoughts on these updates on crypto pricings. Let us know what you feel about this whole concept. One of guys, Akahilz, don't forget to like, share, subscribe. In the comment section, you can let us know what you feel. I'll drop in a link so you can get direct access to these updates and many more. Stay safe, guys.